Hi everyone. In this video, I will teach you why gaps are so important in trading. So, in this video, I'm going to explain three things. What a gap is, when to buy using a gap candle, and when to exit from a stock. At first, you need to understand what a gap is. A gap is the area between the high and low of two candles. This is the open area. Gaps shows strength, whether an upside or downside momentum is present. When a gap is to the upside, it's called the gap up. When a gap is to the downside, it's called gap down. If the gap forms on the resistance zone, it means there is a strong upside momentum. On the other hand, if the gap forms on the support zone, it means strong downside momentum is present. This is the reason why gaps are so important in trading. Why buying a stock, you should look for a gap at the time of breakout into stage 2 or a continuation into stage 2. You must also check the candlestick and the volume. The candle must be wide range candle and the volume must be high before you consider taking entry based on the gap. The wide range candle at the time of breakout is more powerful than a normal wide range candle. Therefore, you should give more importance to it. If a stock gaps up after a major extended up move far above the 50 DMA and the 200 DMA and declines on the second day, it's a bearish signal. In such cases, we must book some profits. A gap breakout from stage 1 to 2 is very powerful, but a gap after an extended move indicates exhaustion, which will likely lead to a short term reversal. We must learn to trip some positions and fully exit when the stock price falls below the pivot point.